Traditionally, advisors were paid on commission. In fact, when I was a young lieutenant, there was a company that specialized in young military officers, and they sold mutual funds. It was a 50% commission. And then the industry kind of evolved into this assets under management. And so that's how I started the firm. We charge an assets under management fee. What I soon realized was people really needed help with planning. And if they had a modest amount of money, frankly, you couldn't serve that person very well in the planning. So we started charging an asset fee and a planning fee. So they were two separate fees. And it was kind of complicated. It's really hard to figure out what to charge people. I think the assets under management model, it's very simple. There's a certain segment of the population that it probably works for. I would say for most people, it's not a great way to pay. You know, when you go for most other types of services, you're paying based on the complexity of service provider or a product, the quality of the product. So I was kind of playing around with different models and how can I do this? How can I be fair to the client, but also fair to me? Like, as a business, we have an obligation to, frankly, to make money. Like, we have to make a profit to stay in business. And so how can we balance those two things? And I toyed around with a bunch of models, but literally in the same week I had this epiphany. You know, you hear these stories about, you know, just the bolt of lightning or whatever. Well, there literally was this bolt of lightning. And we had this elderly lady, she was like 90 years old, and we were charging her an asset under management fee. She had a large portfolio, it's probably $5 million or so. And she had a stroke. She did not live in North Carolina, she lived in another city. So not only could we not meet with her, she couldn't talk. She literally had a stroke and could not speak anymore. Her estate planning was largely done. All we were really doing at that point was investing her portfolio, sending money to the facility that she lived in. I mean, that was pretty much it. But yet on the asset management model, she was paying us a lot of money. So one day, this young couple here in town, husband and wife, both doctors, they made well over $1 million between them. They had a couple kids, they had a rental property from when they were in med school, they had a live-in nanny. You want to talk about complicating your life? Like, have a live-in nanny for tax purposes and other things. Just a lot of complexity. They wanted to buy a house for their mother, who might someday move, you know, want to move to where they live. There's just a lot of complexity. They had no savings, didn't even participate in the 403B at work, had no emergency fund, no nothing, just had never gotten around to save anything. And I was like, wow, I really want to help. They're super nice people. I was like, gosh, I really want to help them. They need help. But under the assets under management model, their fee would have been $0. So how am I supposed to help them? So I was like, okay, forget this. We're doing away with this whole asset under management thing. And I created this model that could serve both this elderly lady that we were arguably not doing a lot for at that point, and this young doctor couple equitably. We could serve them both with a fee that allowed us to stay in business, compensated us for the time and effort to it. And so that model originally, as an engineer, started out kind of complex. The beauty of our model is people seek us out because of the fee model. They find us, they seek us out. Now, there are certain people that it's not appropriate for, and that's fine. If someone's not interested in that and all they want us to do is manage a portfolio, the complexity model is not going to appeal to them. And so that's fine. They've self-selected. So what we find is it lines up perfectly for who we're looking for. Someone that wants our help in all these areas, it lines up really good. So people are really receptive to it. They also like the transparency. Now we publish the formula, we publish exactly how it's created. In the beginning, it's very proprietary. Yeah. And I didn't want anybody to know, I didn't want to publish it. But we've decided, in the interest of transparency trumps the proprietary nature of it, so we give it. We let clients know exactly how it's computed. And people are very receptive to that. They like it.